Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. Today is Tuesday, July the 20th, 2010, and like we do every night, let's take a look at the charts. Start off looking at the Dow Jones Industrial Average. This is a 6-month chart. Each candlestick is 1 day, and you'll notice, like we talked about yesterday, the market is doing some bounce to the upside. It's also kind of sporadic. We had the lower low today versus yesterday, and that's all news driven. This entire market right now is being short-term news driven. The market rallied up into the close ahead of Apple earnings, expecting good news out of Apple, which I would as well. That makes perfect sense. At the end of the day, it doesn't really matter. You will short when she gets up to the 80 line, and now she doesn't have very much room to go before she gets to that point. I don't really mind that move at all. Yeah, I would stay short. I would not be a buyer of this market. We're still seeing consistently the exact same story. We told you going into this thing, look for second quarter earnings to be sporadic. Look for the news, the market to react to the news. We've also got news coming out of Europe on Friday this week. So you've got all that stuff in play. The end of the day, once that news is spent, you're left with only the fundamental data of the economy. And that's caused us this, okay? So I'm shorting the news, selling the news, all right? When the market bounces, I short it, all right? That's why we're playing the way we are, okay? Does not mean we're day trading here, okay? We don't really care what the little counter trends are. The overall trend is down. That's what the fundamentals suggest. That's what the technicals suggest. That's how we're going to play it. Very simple, very cool. And we've talked about this before, and we'll go over it probably 100,000 more times. Every time we see this opportunity like this, and the number one indicator for a chart is price. It's the activity of the candlesticks and the overall chart patterns, so forth and so on, okay? And don't have to make it really complex. You can just say low point, lower low, that's a downtrend. Okay, very easy to spot that. And then you can say, okay, the price is either overextended or pulled back too much and look for a bounce, all right? So you take that, and then the next thing you want to do, that you always want to do whenever you're looking at this price activity, is make sure it's backed up by strong volume, okay? So if this move here, this one, and this one, as well as this one, were backed by strong buy volume, and this was all weak selling, we would not be bears here. We would be bulls. But that's not what we have. If we scroll down and look at the volume, we show it to you almost every night now. Check us out. Scroll down and look at that volume. You can see that the strong volume, the institutional activity, is to sell this market. All right. This is what your smart investors and traders are doing. Okay, they are dumping their stock. All right. The retail guys, this little bit of all of them down here, yeah, they're buying. All right, the counter trends, and mostly they just don't really know any other way to do it. Okay. Now I have no problem with guys who perhaps see a bounce coming and they're traders, something like that. That makes sense too. But if you're just buying because stock prices go up, yeah, it's a bad system. If you're looking at the actual trend, it's down like we showed you on the chart, and the volume is supportive of that trend. You don't want to be fighting that tornado, okay? Now, once we have that, there's also other indicators out there, but they're what we call secondary indicators. Price activity and volume are primary, okay? Everything beyond that is, of course, secondary. So let's have a look at some secondary indicators. I got some questions on that, so let's respond to those. If someone wants to know what I think about the RSI indicator right here and right here, you have higher highs right there, okay? And they're wondering, shouldn't that reflect in higher highs on our short-term chart right now? If you look up there, you can see we don't have that, but he was basically stating, shouldn't that be the case? And you'll notice you got the same thing right here. You got there's and there, okay, showing an uptrend right there like that, and low points as well, okay, showing an uptrend. But price is still showing a downtrend, so he wants to know what we think about that. To me, it's telling me look for a bounce and look for uh, the market to bounce. Well, we've called that bounce. It did bounce, and now we're looking for it to peak out. So once it gets up to the overbought condition of the slow stocks, of course, we're going to be shorting at those points. Okay, so that makes perfect sense to me. If you look at the, let me get rid of those. If you look at some of your other indicators, they're pointing down. Okay, the momentum histogram downtrend. Okay, price activity downtrend. Let me show you the price activity again. All right, let me get this right where I want it. Okay, price activity that we're talking about right here, it's here, and here it's showing a downtrend, and that RSI, the MACD, would suggest an uptrend. So like we said yesterday, there is potential for that to still come up here and make a new high and then roll over. Okay, there's potential for this to kick around up here and then roll over. All right, and note here and here is showing a downtrend on the high points. Okay, so it's somewhat confusing if you just go look at some other random indicator, but the main thing to consider is, where is smart money betting? Okay, they've done their research, they've done their homework, they're betting on this market to go lower. Where's the overall market trending? That's obviously not happening by some mere accident. It's happening because there's more sellers than there are buyers in this market, and therefore she's trending lower over time. Okay, we're not day trading here, we're swing trading. So you just want to stay with that trend. Okay, and it's also noted on the long-term chart as well. You don't want to fight those two charts. Okay, they're both telling you the same thing. Why fight it? All right, awesome. Okay, quick look at the FTSE. There's something to note here. Saw it yesterday and then again today. Can't really see it here. Let me get another chart. Okay, that's better. Here we've got the FTSE, and this is the London Financial Times Index. And what you'll note here, from a very short-term perspective, just looking at these five candlesticks, you've seen 5 consecutive days of selling here. Okay, no hammer formation or anything like that, so we don't have a real bottom here. But you've had 5 consecutive days to the downside, and it's been a very tight trading range, really. It's just been between this distance. And then last time you had 5 days of selling, well, you had 4 before you saw a day at the upside. But look at the difference in size between here and here. This to me looks like a consolidation before that Friday news that we talked about. So look for this market to actually have potential to make this move back up here, like we talked about on the Dow Jones Industrial Average. You can see the same thing right here, and it's more likely here because you've got the slow stotch signaling it as well. Okay, so you've got the slow stotch signaling. It should have a higher series of highs between this high point and this high point. So this one right now is showing a downtrend. This is showing it should be an uptrend. So there is potential for that. Again, I would short it. I would not buy it. Okay, big difference between short-term activities of a day here and a day there based on the short-term news and the realities of the fundamentals and the technicals, which are still the fundamental side is still getting worse. You've got Ireland being downgraded now even further, and so forth and so on. So these issues are not going away. They're not being resolved. And even if they try to resolve them by austerity measures, that pulls money away from the economy by taking increasing taxes, decreasing wages, and so forth and so on. So none of that can stimulate an economy, all right? And that's going to further crimp the markets, and it's a reason to be a bear, not a reason to be a bull. So keep that in mind. Nothing really different here. Nothing new. Stay short, and I'd sell the market bounces. It's pretty simple. Sell the news, okay? If you've not been to our free website at perfectstockalert.com, it's 100% free. It's right there. All we ask in return is you refer a friend. It's very cool. And please subscribe to our YouTube channel, or we'll hit you with a stick. Also, I'll see you all tomorrow morning in our live trading course, where we teach on this technical analysis stuff to anybody who's interested. Hope to see you there. Let's have a look at our disclaimer. Just a quick look at the disclaimer. Read it and weep. God bless. Enjoy your evening. I'll see you all tomorrow.